friends, and welcome. I'm Carrie Nelson. I'm a realtor with West USA Realty. I am located in the West Valley Phoenix suburbs. I do service Phoenix and all of the surrounding areas. I'm actually licensed to sell anywhere in the entire state of Arizona. So for all of your Arizona real estate needs, I got you. One of the recent and unfortunate trends we've been seeing in real estate lately is people losing their financing because they've either lost their jobs or they have reduced hours at work because of COVID. With that in mind, I wanted to just make a quick video this week about 5 different things that can fuck up your financing and make it so you can't close on the home that you are either building or trying to buy. I'm going to apologize in advance because there is a ton of construction going on behind my house right now, and I hear trucks beeping, and it has literally been nonstop since like 5 a.m. So I'm sorry in advance if you hear beeping trucks. The first thing that can mess up your financing when trying to buy a new home is opening a new line of credit. When you apply for a mortgage, your lender does a credit check to review any current debts or payments that you may have. Even if your credit is really good and you pay your bills on time, having too much consumer debt or too high of payments can absolutely affect the amount that you qualify for. Basically, your mortgage payment should be no more than 28% of your gross monthly income. And your total minimum debt payments, including your mortgage, should be no more than 36 to 43%, just depending on the type of loan. By applying for new lines of credit before closing, so say you go to a furniture store and you want to buy new furniture for your new home and you apply for a credit card with that furniture store, or just apply for a new credit card in general, this can affect your debt to income ratio and thus affecting your financing. Lenders check your credit in the very beginning and then also 2 to 3 days prior to closing, and more recently I've been hearing about them checking it the day of just to ensure that they are good to go. You're usually in escrow for about 30 to 45 days, just depending. So if your debt to income ratio has increased significantly in that 30 to 45 days, you might lose your financing. The second thing that can mess up your financing is spending too much money. As a buyer, you may think it's okay to start shopping and use cash instead of credit, but it is super important not to spend any large sums of money until after closing. Bank statements are checked periodically throughout the loan approval process to make sure you have enough in reserves to afford your down payment and, of course, closing costs. In many cases, lenders request updated bank statements right before you close. If there isn't sufficient cash to close, this could possibly delay your purchase or jeopardize it entirely. The third thing that can mess up your financing is changing jobs, quitting jobs, or reducing hours. Mortgage lenders verify your employment and your income at the beginning of the loan approval process. They verify it again once we get closer to the closing date, and more recently, they're verifying it the day of closing as well, just to make sure everything is still in order. So for example, if you quit your job, you lost your job recently due to COVID, or you have reduced hours because of everything that's been going on the past few months, the lender does have the option to cancel your loan if you no longer qualify based on your current income. Obviously, shit happens. Sometimes you need to change jobs while you're in escrow, but the lender is going to need 30 days of check stubs to verify your new income, so this could delay your closing. If you're planning on changing or quitting a job or even reducing your hours, wait until after you close. The fourth thing that can mess up your financing is you're unable to sell your current home. If the new home that you're purchasing is contingent upon the sale of your current home because you need funds from your current home in order to put down a down payment or put down money towards your next home, then obviously if that home is unable to sell and you don't have the funds, you could lose the new house. Your lender may still allow the loan if a new buyer comes in within a reasonable time frame. So let's say the first buyer had to cancel or they fell out of contract for whatever reason, then if you have a new buyer come in within a few days and you still have at least a few weeks before closing, it may definitely be allowed by your lender. The fifth and final thing that can mess up financing on your home is a low home appraisal. Your mortgage is contingent upon a satisfactory home appraisal, and what that means is your lender sends out an appraiser to assess the value of the property to make sure it matches whatever the bank is willing to loan you. If you and the seller agreed on $400,000 as the purchase price from the very beginning, but now the home appraisal comes in at $390,000, then the home price and or terms of the contract need to be renegotiated at this point. This is usually a pretty easy process, but occasionally it can be a difficult process. A motivated seller will most likely match the home price to whatever the appraisal value is and just continue with the sale. If a seller is unable or not willing to lower the asking price, then you have the option of coming up with a little bit more money at down payment, just depending on whatever the difference in that appraisal value is, or walking away. A story that I wanted to share that would fall under the category of either spending too much money or opening a new line of credit was when my husband and I bought our house in 2014. It came back onto the market as a spec home because the people who were originally building it decided that while they were in escrow in building this house, that they would buy an $80,000 Mercedes. So obviously they lost their financing since they decided to do that in the middle of escrow. Definitely not something I would recommend doing, but I'm glad they did because otherwise we wouldn't be living in this house. So thank you for buying your $80,000 Mercedes. If you have any questions about these topics that I just covered, or you have a lender specific question that you would like to ask, please feel free to reach out to me. I would be happy to get you some answers. And if I can't answer your questions, I will put you in touch with an amazing lender who can. Thank you so much for watching, and thank you for all of your continued support. Please be sure to like, comment, subscribe, or share if you're watching this on social media. I would greatly appreciate the opportunity to keep growing. Whatever day it is, whatever time it is, I hope you have an amazing day. I hope you have an amazing week. I'm sending you all of the good vibes, always. And on that note, I will see you here next week, same time, same place. There they go. Still awkward as hell. I know. I'm out. Bye, guys.